the biggest question, it seems to be, is you offer a 20% premium over what had already been offered from Canadian Pacific. Why? Why now? And why didn't you do it earlier?
Yeah, so I could give you three basic reasons, fundamental pillars why now. Basically, the board of KCS has decided it's time for them to crystallize the value for their shareholders. Railroad don't come for sale very often. And obviously, the board of KCS has decided that they seriously want to do a transaction right now, a transaction with a strategic partner with another railroad. So we don't want to be, this is a great opportunity for CN to consider this right now. Number two, though, is really about the economy. Well, our vision has been for a long time to create a very solid north-south network, a network that can capitalize on the economic recovery here post-COVID. Timing is perfect for that. But also the USMCA, or what some people know as NAFTA, has been renewed recently. That bodes well for manufacturing goods and consumer product moving between the three countries, north-south. And finally, there is also on the economic side, the nearshoring. The relationship with China, a little challenging. The labor costs in the coastal province of China have got higher. They're probably higher than Mexico right now. And you could see some supply chain wanting to move to this continent. And finally, CN's balance sheet is solid. We kept our powder dry, so to speak, for the last 2 decades, waiting for a potential big transaction to come around. And the opportunity is now from an economic point of view, or already from a position of KCS. So we're putting our best offer this morning and a call for KCS board to partner with us in what will be the railroad of the 20th century.
JJ, it's Guy in London. Why is this business worth 20% more to you than your rival?
So we have a bigger moat. You're looking at, we look at North America and where North America is heading right now to the overall economy. The consumers, the service sector is the biggest sector of the GDP. That means people who have good job, good paying job with good disposable income, and therefore they consume. They consume around home. They buy white goods. They buy product from abroad. So that's the world of intermodal, and that's really the big future of freight railroads in North America. Moving large quantities over long distance to people who live in big city who consume, but also some people who live in smaller industrial town like automotive town who move other. So the mode here is basically the North American economy and where the economy is going and what kind of freight it will generate.
JJ, I don't think that we're arguing the point on the actual fundamentals of the deal. It's just the timing and the price. Now you could enter some kind of bidding war. You offer 20% over versus if you had offered something for Kansas Railroad before Canadian Pacific did, you may be in a different spot. Can you walk us through why you were late to the game?
I'm not sure it would have changed anything. I think the opportunity here today of KCS decided that it was time for them to crystallize value for their shareholders. It may have been the same situation, meaning that combining railroad is something that creates a lot of value. So you want to combine railroad where the geographic fit and the market fit is the best. In the case of CN, we also have the balance sheet to offer the full value, the real value of what these two railroads combined together would be. So the timing is basically partly set by the board of KCS. If they decide it's time for them to crystallize the value, then the real offer, the real value of the company will transpire as a result.
Do you expect Pacific to come back? To Alex's point, do you think you are in a bidding war?
We're focusing on the KCS and offering them, their customers, their employee, and everything they've built over the last 2 decades, something that they would value, not only from a financial point of view, but also, the KCS team is very solid commercially and operationally. We're also very mindful of, their role as the stakeholders in all of the cities and places where they have businesses, where they have jobs. And in that mindset, we're offering KCS to have Kansas City remain the headquarters of all of the combined U.S. operation. And the whole transaction is based about growth. It's only about 20% related to costs. So it's not a major effort in reducing job. It's an effort about creating job in the railroad, but also creating jobs for those who are banking on the USMCA as a basis from which they will grow their own business, whether manufacturing or consumer goods.
Definitely a good selling point when it comes to regulators on that point as well. Can you talk me through the conversations you've had with U.S. Regulators? Because this would create North America's third largest railroad, and some analysts think that that's going to pose a higher regulatory hurdle than if Canadian Pacific bought Kansas.
So when you look at the regulators, there's the three country, and the regulators have the biggest decision in this process is the STB, the Surface Transportation Board. And when you look at a combination, they'll be looking at the size of the two companies inside the United States. Definitely, to really create the value that we want to create, we need to connect the three countries with a solid network from all the way to, Mexico City, all the way to Toronto, Calgary, and Michigan. But the STB will be looking specifically about the operation within the United States. And from that point of view, we're not, the four big railroads in the United States will remain bigger than the CN, KCS combined U.S. operation. But you got to go back to the value. The STB is focused on the user of the freight network. They're focused on the stakeholders around the freight network. They're focused on the environmental impact of what these combinations do. In the case of CN, there's a good story on all three fronts. And our growth story is really focused on removing quite a number of trucks off the road. The rail infrastructure between Mexico and Canada is fragmented. It tends to be mostly a bridge between Laredo and Kansas and Chicago. So what we offer is really targeting, in large part, about 70% of the revenue synergies are really to compete with very long-haul truck. So from that point of view, the social benefit and the environmental benefit is much more obvious because railroads are four times more fuel efficient than truck. Therefore, our CO2 emission are 4 times less.
It's fascinating how many CEOs like you now talk about the ESG credentials of the deals that they're looking to do, certainly increasingly becoming part of the narrative, part of every meeting, I would imagine. Jean-Jacques, to that point, do you think if it's not this asset, it'll be another? Do you think the argument could stack up with other rail networks? Or is there something about this network that is a particularly good fit?
Yeah, I can't speak to what other rail network may have in mind if there are.
No, sorry. If you don't buy this asset, will you be looking to buy other assets?
If you look at the history of CN, since we did the IPO, we've been publicly listed now for 25 years, but we've been in business for 100 years. Our growth history has been on two fronts. We made 18 acquisitions of different size, big, small, a number of them in the United States, and we also did organic growth. So the future of the company is definitely a future anchor around growth. Organic growth on the network they currently have, and also as combining with others, big or small asset to do acquisitions. So this one today is very strategic for a long term. What KCS has really fit well with the vision we've had for a long time about creating a real north-south network. And it's in that reason that we're making the offer. I just want to emphasize the point you made on ESG. ESG is extremely important and critical to the future of all industrial companies like CN, but especially in transportation. There will come the time where people will ask more and more questions. What are we moving? Are we really dependent on thermal coal in a big way? Are we moving more consumer goods? And how are we moving it? What's our carbon footprint? So we are already, CN is 15% more fuel efficient than the average North American railroad. And we're all working on the technology of the future. We're looking to, eventually to convert diesel fuel into biodiesel. And also we're going to do some trial with some electric locomotive to increasingly become a mode of choice as the economy needs to move and will move toward a lower carbon footprint.